Good afternoon. My name is Ashley Vargas, and I will be presenting to you today the Quarter 2 findings of the Purchasing Department for FR Manufacturing Company. Now, the Purchasing Department is tasked with procuring raw materials such as chemicals and plastics. Those materials are used in the manufacturing of products, including the new line of refrigerators. So, our meeting today will discuss in more detail some of the findings of the quarterly audit. Estimates must be created to determine approximately how much the company will spend on materials, and it is very important to accurately capture these numbers as the estimates are used to set specific company targets, including the cost of goods sold. Preliminary estimations completed by the engineering team projected that a specific amount of polyurethane would be used during the manufacturing process. However, a quarterly inventory count determined that $350,000 of polyurethane was missing. Now, consequently, the team determined that a greater amount of the polyurethane material than what was projected as being consumed during the manufacturing process. So let's take a deeper look into how these findings will impact the company from a financial standpoint. Now, the cost of goods sold includes all of the costs and expenses related to the production of goods. We use the journal to capture the costs associated with materials purchased and to record the other financial transactions of the company. Now, we use the T account, which you see on the right of our screen. We use that as a visual structure to keep the debits and credits separated. So again, on the screen, on the left side, you see the journal entry, which shows the inventory write-off that we are discussing today. Now, inventory transactions are related to cost of goods sold because higher cost of goods sold will result in lower margins. Now, on the next screen, we can see the adjusting journal entry and the T account. A journal entry must be made at the end of the quarter to bring an asset or liability account to its proper amount and the proper related expense or revenue account updated. Therefore, an adjusting entry must be made due to the inventory count that uncovered the missing polyurethane. The cost of goods sold will appear to increase as a result of the adjustment. This, in turn, will make it appear as though the net operating income has decreased. Now, there are several action steps that we can take to ensure that we avoid making this sort of forecasting error in the future. The first step, and probably the most critical to this process, would be to determine the actual cost to manufacture the new refrigerator. So the engineering team must revisit the product and materials cost to ensure that we have accurately captured the process and that all is needed is accounted for manufacturing. Further, the team must then review processes to determine if there are any opportunities where any processes may be streamlined or made more efficient. So we have more of a reference point as the new refrigeration systems have been manufactured for several months now. So the final step that we must take is to audit the budget on a monthly basis. So if we are constantly viewing our budget, we are able to notice if things are performing the way that they should or if any additional adjustments need to be made. Now, I know we've covered a lot of information today, but does anyone have any questions? All right, perfect. Well, again, thank you so much for your time. I appreciate you letting me present this information.